managerial accounting, degree of operating leverage. Now, once again, we're looking at our second contribution margin income statement, where at the current level of sales, 50 units, a price of $25, variable cost of $15 per unit, and fixed cost of $200, we currently have a contribution margin in total of $500 and operating income of $300. So sometimes management may want to know how sensitive our cost structure is to changes, particularly to changes in sales volume as a percentage. So if we want to answer that question, to get an assessment of the sensitivity of our cost structure to percentage changes in sales volume, then we calculate the degree of operating leverage. Now, DOL for a given level of sales is contribution margin divided by the net operating income. Now, this does need to be in dollars. Margin of safety could be calculated in total dollars or per unit, but for DOL we need to look at the total dollar information. So on our contribution margin income statement in the second example, our contribution margin was $500 and our net operating income was $300. Once again, not pretty numbers. 500 divided by 300 gives us a degree of operating leverage of 1.666666 and so forth. So how do we use this? Well, once again, we use the degree of operating leverage to assess the impact on net income of a percentage change in sales. So let's say that percentage sales, that sales are expected to increase by 20%. Then how much will this impact net income? What will be the impact on net income? Well, to calculate that, we take the current net income, which we've already got right up here in our DOL calculation, that's $300. And we multiply that times the percentage sales increase, which we just assumed was 20%. And then we multiply that times the degree of operating leverage. So for us, that was 1.66666, 1.67. Again, we got some rounding issues on this. So 300 times 20% times 1.67, and what we get is that net income, given a 20% increase in sales and the current cost structure, that net income is going to increase approximately $100. So if we're given a per unit, number of units increase, we use contribution margin per unit to estimate the impact on net income. If we're given an increase in sales dollars, we use contribution margin ratio to estimate the impact on net income. If we're given an increase of sales as a percentage, then we use the degree of operating leverage to estimate that impact on net income. Now, one word of caution. This degree of operating leverage is only valid for this cost structure. If next year we achieve that 20% increase, then our relationship between contribution margin and net income will change, and we'll have to calculate a new degree of operating leverage to use for our planning and estimation purposes. So be careful. DOL is only valid for one given set of data.